Hello and welcome back to this episode of the Day Trading Bootcamp. In this episode, we are going to discuss inverse fair value gaps. So like I talked about in the fair value gaps episode, watch that one if you haven't yet. We have fair value gaps forming when price is trending upwards. When price is starting to reverse the trend, we will disrespect bullish fair value gaps and we will turn them into inverse fair value gaps. So as we can see, this fair value gap got closed through by this candle. Then the next candle retraces into that inverse fair value gap, and we can look to take an entry there. So this one is also super simple to see in the market. Fair value gaps are really, really easy to see, and then we can see as fair value gaps get disrespected, that the inverse gets respected. So let's go over it in real chart examples. So we can see right here, price started to push up, and we form a fair value gap here. We form a bullish fair value gap here. Put it in red, bullish fair value gap. We then see price start to disrespect it. We come in, start to push through it. Price goes up one more time, and then we push through it very strongly. Price keeps going through it. We also displace through this swing low, but we disrespect this bullish fair value gap. We then retrace into the inverse fair value gap, and notice we also have a bearish fair value gap combined with a inverse fair value gap. And if we look at this one, price retraces into this bearish fair value gap. We make a bullish fair value gap on the retracement into bearish fair value gaps. We make this bullish fair value gap. Price starts to push through it. We go up one more time. This candle, we push strongly through the bullish fair value gap, disrespecting it. We then create an inverse. Price tests into the inverse with this wick, and we push down from there to go lower. So before I was looking on a 1 minute time frame, I'm now on a 1 hour time frame. Remember, these concepts work on every time frame. Looking here, what do we have? Price was downtrending. We're downtrending here, downtrending, making bearish fair value gaps. We make this bearish fair value gap here. Price then starts to push up. We shift market structure right here, push up. We close through this bearish fair value gap. We're also closing through these bearish fair value gaps here. And when price retraces down, where does it go down to? We go down to this big bearish inverse. We go back to this inverse fair value gap, and we tap into this inverse fair value gap. And yeah, then we can look here, the same example. We go a little more. We have this bearish fair value gap right here. Boom. Bearish fair value gap. We start to push through it. We can't just yet. Boom. We displace through it. We disrespect the bearish fair value gap, creating an inverse fair value gap. Price starts to push up. Where do we test back into? We test back into the inverse fair value gap to go higher. And again, if you want to keep going, right here, we have this bearish fair value gap. Boom. Bearish fair value gap. Price starts to go through it. We come down a little. We then get a strong candle all the way through it, disrespecting this bearish fair value gap, turning into an inverse. We retest into it, and we push up from there. Just like that. Same thing right here. Bearish fair value gap. Push through it. Push through it. Retrace into the inverse. Push off of it. Just like that. And then it's the same thing for bullish fair value gaps turned into inverses. So right here, we were uptrending from there. We form a bullish fair value gap. We then start to push down. We shift market structure right here. Shift market structure. Market structure shift, if I can do that. And then we displace through. We disrespect this bullish fair value gap. Where do we retrace into? We retrace back into that inverse fair value gap, and we continue down from there. And also, same example on this move down. Where did we test into? We tested into this previous inverse fair value gap. If I draw this out, we tested back into this this bullish inverse fair value gap. That's where we tested and pushed off from. So super cool ICT concept. I love the inverse fair value gap. We can use it off entries. We can use it to determine a bias. I wouldn't really use it to target areas in the market, but you definitely can. But super easy to recognize in the market. Backtest this one for yourself. Thank you for watching this video. I'll see you in the next one. Peace out. Also, leave a comment if you've been liking this series and you like this video. I've been trying to put out a video every day, and I recorded 7 videos yesterday, and I'm going to record 4 more today to post while I'm on vacation to visit my grandparents. So grinding them out. Let me know if you like them in the comments, and I'll see you tomorrow. Peace out.